Missed out on the 2012 property boom? Rethink Investing are currently sourcing commercial properties delivering 25 to 40% cash-on-cash returns. Enter the lucrative world of commercial property with Rethink Investing, Australia's leading and award-winning commercial property specialists. Don't miss out on the highest returns to be found in Australian real estate in almost a decade. Find out more today at rethinkinvesting.com.au.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
And that is correct, by investors for investors. Phil Tarrant here, host of the Smart Property Investment Show. How are you going? I've just been spending, to give a bit of an insight into the tagline, by investors for investors. I've been spending the morning on my portfolio, which is good and bad. I find it a little bit frustrating sometimes. It feels like, and if you've been tuning into the Smart Property Investment Show, the last sort of couple of months or so, I've been talking about it on our property update, which is where we talk about the Smart Property Investment portfolio. It's a good portfolio, sort of 18 odd properties in it. In the last update, we did north of $8 million in value with about sort of $5 million worth of debt in it. So it's doing well. It's cool. But there seems to be a lot of headaches at the moment. I've got to put in some new pergola beams on in one property we got up in Springfield. In Queensland, got to put a new roof on another place up in the Central Coast, and that's a bit of a headache, and that's expensive. I've got leaking taps and washers, all the usual stuff that you would expect there. There's people complaining about treads of some stairs sort of not working. So, and that's a health and safety issue, getting on top of it. But I've been spending the morning on the portfolio, and I'm going to be having a chat with that soon on Property Update. So stand by, watch this space or this airspace. In a couple of weeks' time, we'll do another property portfolio update, and I can fill you in on where we're going. And as I promised, we're going to do some P&L type stuff and some expense type stuff in that as well. Been speaking to some banks this morning, and which is a little bit painful. I've got and maybe you've all sort of had a similar things where fixed rates, your sort of fixed rate expiries doesn't necessarily align with your loans moving into principal rather than interest only. So I've been dealing with that, but negotiating also, because I'm getting a whole bunch of stuff coming off fixed rates at the moment. They're all pumping up to a lot of principal and interest type stuff, so which is increasing the holding cost of the portfolio, but I am paying down debt. So we're going to get into that a couple of weeks' time. Check it out. I'm right into it at the moment. I'm trying to make sure I can run the best portfolio possible and prepare for growth, because I think it's a good time to be investing in property. That's what we do here, help people make those informed decisions. We get the experts in. We also get property investors in, and we have a return visitor. Backed by popular demand. We got a lot of commentary from all of you, so thanks so much for writing into us, editor at smartpropertyinvestment.com.au, but also right across all the social media channels where you're listening to this podcast. Backed by popular demand, Jim Hall, property investor extraordinaire. How are you, Jim?
I'm very well, thank you, Philip.
Now, the last time we spoke, and it's probably about 4 months ago now.
Oh, I think it was longer. I think it was actually back in about October of last year. And I think, to share my sort of opening sentiments there, there's a bit of a love-hate relationship with your portfolio at that point in time. So I thought I'd get you back into the studio, have a chat, see what's going on. Is it any better? What's the latest? Are you happy about it? I'm still not in love with it.
Have you fallen out of love with your property portfolio?
No, I haven't. It's grown on me actually from back then. Yeah.
Is it reluctant love?
You could say that. Yeah.
Or is it puppy love?
Well, it's quite old now. Actually, I realise I've been invested in property for over 10 years. So
okay,
yeah,
that's pretty cool. That's a long time. So at least one market cycle. What do you reckon, before we sort of get into your portfolio, what do you reckon about the current market? It's fired into gears at the back end, probably around October of last year. And I like to think the sensible commentary on Smart Property Investment show over the period of COVID was that don't fall victims of some of the stupidity of the commentary coming out about property price drops of 25 to 30%. If I think back to that period of time, we said, hold the line, property is a great asset class, stick with this period of negative sentiment, because at the other side of it, there's going to be an uplift, and that's where we are right now. What's your views, Jim, of how it's all working?
Yeah, I tend to agree with that. I mean, I think you probably had, going back a couple of years, there was definitely a bit of a price drop, particularly in Sydney. And
I think over the last 6 months, you listen to the commentary and houses can't sell quick enough. They're going for crazy prices. There's a frenzy in the house market, which, maybe that's true, maybe not. I haven't actually bought myself, but I have. I've been speaking to quite a few people that have bought and are looking to buy, a mixture of both property investors and homeowners. And I think one of the biggest things is there's a real lack of stock on the market at the moment. As I'm sure you're all aware of that, listening to this show regularly. So that obviously poses a bit of a problem when you're trying to build your portfolio or buy. I guess it's good for anyone that already has an existing portfolio, because obviously that's the situation. It tends to put upward pressure on prices. So it's an interesting market at the moment. I know I haven't really given an answer there, but certainly opportunity, but it's difficult to get in. I know there's a lot of very, very good property buyers there who've got a lot of clients that are all looking to buy because of the upward momentum on prices, but obviously finding it a struggle competing for the actual properties. But there's certainly opportunity, and I'm glad I didn't sell a few months ago, put it that way.
Well, a lot of people are thinking about it. Now, are you riddled with FOMO that you're missing out on all these buying opportunities at the moment?
No, I'm not, because I've got quite a lot going on anyway, and as I said, sort of 6 months ago when we caught up, I'd kind of forgotten about my portfolio somewhat, or rather just sort of let it be for some time. I sort of put everything on fixed rates a couple of years ago. And yes, if you recall, I had a property which was riddled with termites and essentially needs pulling down. So I've been going through a lot of work, looking at that and the opportunity there, which has turned out really well. So I'm just about to enter a phase of building, which is quite exciting. So I guess I'm manufacturing equity another way rather than buying.
Well, there's a whole bunch of ways to do that and strategies around property investment. Now, Jim, we were incorrect. It wasn't October. It was late September.
Okay, there you go.
Last got, and even if you want to press pause now and go and listen to this podcast to set the scene, silver linings, how life and bugs haven't changed this investor's outlook was the headline, Jim. and it wrote... Phil Tarrant is drawn by Jim Hall, an investor with 10 properties to his name. In the 4 years since his first appearance on the show, Jim has been through a relationship breakdown which saw his $5 million property portfolio restructured and refinanced to now be worth around $3.2 million. In a candid conversation with Phil, he reveals the importance of approaching a separation as a win-win for both parties, how termites originally required him to change up his property strategy and his attitude towards refinancing debt. So it was 4 years from your first appearance to then, and now we're only talking literally about 6 or so months, 7, 8 months is what it is since you're back. So it feels like not that long ago.
I know, time goes quickly, eh?
It does. So I think with the sort of whole backstory to you having to restructure your portfolio, I think we did that pretty well in that last podcast. Where I want to pick it up is this the bug story, Bug's life. Jim's bug life. You found heaps of termites, by memory, or remind me, in a house in...
just outside Campbelltown, a place called St Andrews.
Okay, it's just outside Scrambletown, and which you're doing really well at the moment, all around now. I've got places out there, Ambervale, etc. You went and checked it out, and someone said, this house is a health hazard. You need to knock it down.
Pretty much, yeah. There was just over a year ago. There's some really bad rain, and basically there was a bit of a leak, and one of the ceilings looked like it was going to give away. And then on further investigation, termites had literally riddled the place, all the joists, and by the time you looked at repairing it, it wasn't really worth doing. So I've sort of moved the tenants out straight away, as it's probably a bit dangerous for anyone there. Left it alone for a bit, and then just sort of, as I said,
So it's been empty all this time?
It's been empty for over a year. Yeah.
Oh, was that hurting the old hip pocket?
Yeah, a little bit.
How much are your mortgage a month on that?
The mortgagee payments are about $1,800 a month.
Okay, principal interest or interest only?
Interest only.
Okay. How does that make you feel? No money in, lots of money out.
Yeah, not great, not great, but just that's life,
eh? So no one's in there. and no one probably shouldn't be. And I'm sure you could have rented it out, but it's probably not appropriate considering it's
quite
situation. So, and that's a good point for our listeners around your responsibilities and duty of care as a property investor.
Absolutely.
It's got to be habitable, right? Otherwise, someone hurts themselves on your property. There's some challenges around that if you're negligent. So it's been sitting there. So what's been happening in the background? You've been trying to work out what to do, or is it a bit, you've already set the strategy and been trying to find the people to help you execute?
Well, yeah, after some sort of initial consultations with property buyers, mortgage brokers, etc., I started looking into what my options were. I sort of thought about just cutting my losses, selling the land. Then I looked at, potential development. It's a big block of land. It's on a sort of 900 square meters, but it's on a bit of a slope. So that was a bit challenging. So yeah, so I spoke to a few different people, got some quotes in. The first sort of quote came in at sort of 1.1 million to build. So I was looking to build sort of two sort of four bedders, a duplex of 4 bedrooms, and I mean that just made it just completely undoable at that sort of pricing. So I was sort of gone from being really happy, thinking, here's a really good opportunity here, to my first sort of quote was like, wow, this is not going to work out at these sorts of sums. And sort of went back, revisited, spoke to a few other people, got a contact in the end for a builder through my accountant, Munzerall.
Munzerall to the rescue again.
Yeah, and in the end, looked like we could make the numbers work, and they looked quite good. But in order to do that, I had to sort of refinance my whole portfolio, which was quite interesting.
Okay,
because a lot of my loans were on fixed rate loans, and the term hadn't ended. So
okay, all right. Well, that's complicated. We'll get into that in a moment. So just staying on the what you're going to do side of things.
Yep.
So you had to do some mortgage stuff as a result of this strategy.
Yep.
So you've now chosen a builder?
I have got a builder, yep.
Okay. And have you entered into a contract, or that still needs signing?
Yeah, I have, just entered into a contract.
Okay, you signed the contract. Go ahead. Who helped you do with that sort of?
Well, okay.
I know how much you love a contract.
Yeah, yeah, quite. I've got a lot of experience putting
You love
contracts together,
yes,
going through contracts in the last year or so. Well, my accountant and property buyer as well. So gone through it. So,
okay.
Yeah.
And how much? What's the total bill cost?
Total bill cost is $670,000.
Very different to the original quote that you
Correct.
For largely the same thing.
Absolutely the same thing. Yeah.
That's what the disparity between the two. Why is that? Just someone lying in their back pocket?
Pretty much. Yeah. Pretty much.
Okay. Jesus, that's a big difference. So how much?
670,000 to build the 2,
and you get 2 4-bedroom townhouses,
and that's full end to end. So they'll take care of all the DA stuff, all the planning, all the council that needs to be done.
Really? Who does all the DA
landscaping?
Stuff? The builder.
So they'll do it all for me. So I literally don't have to do anything apart from paying.
That's handy.
It's very handy, and then they'll give me the keys when it's done.
And okay, that's cool. And how much excavation you got to do on the blocks?
It's quite a bit, yeah. I mean, the excavation is about we've got to knock down the old house, which is sort of $20,000 to $30,000.
Yeah, let's go through the top line. Then excavation. And a lot of people misunderstand or fail to attribute the expense with excavation can be expensive, and a lot of times when you start excavating it, I've got to dig out more than what.
Yeah, it's an extra $50,000 just because the block is on a slope.
Okay, so that's to dig it out and get rid of the landfill.
Correct. Yeah.
Okay.
Yep.
All right, and then you probably, as a result of that, you probably got some money spent on retaining walls.
Correct.
I would imagine.
Yep.
Okay, and then once all that's done, they can build the houses, which are going to be on a slab. What, 2-story?
2-story, 4
duplex.
Bedrooms, duplex. Yep.
Wow.
Yeah.
That's cool.
Yeah. So,
how big is each sort of duplex? Quite large?
Yeah, reasonable size.
And are you splitting the block in half?
Split pretty much.
So you're going to end up with 2.
That's right.
2 different titles.
Yep.
2 properties.
Yep.
Are you going to keep both of them?
Yes, I am.
Okay.
At this stage, I am. Yeah. So again, going through the numbers with my accountant. I'm not looking to sell them.
Okay. And what sort of rent will you get on those?
Rent at the moment, managing agent that I've currently got, about $550 a week on each one.
Okay. $550 a week on each one. 1.1. Okay. That's $55,000 a year in income. How what's the current debt on the property?
Yeah, so there's 500 grand on the property at the moment,
Okay.
Which I'm refinancing. Yeah. And then, with the builder, let's call it 700 for a few extra costs. So you're looking at about 1.2 million.
Okay. All up.
But then when the build is done, current rates today, I've got some sort of appraisals from some different agents in the area. Similar sort of 4-bedroom duplexes. Older ones have been selling for upwards of 800,000. So hopefully once they're done, we can revalue and look, if prices continue to go up the same way they do, we should comfortably sort of looking at 800, 850 for each one. So
if you get
revaluation of 1.6 million, so create maybe $400,000 of equity.
Sounds worthwhile.
Yeah, definitely. Yeah.
Okay. And when you actually went through this process and realised the outcome, did you go, well, this has turned from something which has largely been a negative experience into something which can be positive?
Completely.
Some of the best gifts come back to that wrap, Jim.
Yeah, it's not been easy.
But that would even pay off, like how much you paid in interest during that period of time without a
Exactly.
year. Like a lot of people would buy a place anyway and have to hold it while they do a DA. So to try and sort of relieve some of the stresses and pressure around it, you're going to get back that money in droves.
Exactly. Yeah. I'd sort of thought worst case scenario, look, I can just sell the land as is and that would pay off the loan. And look, it is what it is.
Yeah.
Can't complain too much. But it has been quite hard work. My mortgage broker's done a fantastic job along with my accountant to sort out all the financials that are required. And ultimately as well, sort of refinance. So I'm paying a bit in break fee costs.
Well, let's have a chat about that because it's a big part of the process, right? It's being able to obtain finance and how you finance this build, which no doubt is a construction loan. We'll just go to break beforehand. Stay with us. Back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent, Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Jim Hall, property investor extraordinaire. He's making money all over the place, it sounds like.
I don't know about that.
It's a lot of potential money to be made.
Wasting money.
So you mentioned before the break how you're going to structure this particular project, which makes sense. You've already got the land. It's got a house on it. Knock it down, excavate, build a duplex, so 2 4-bedroom attached dwellings.
In England, I'd call it a semi-detached house.
Semi-attached. Oh, there you go. Not a bungalow, which is what the English like to call normal houses. And by going through this process, you've got additional holding costs and stuff. You'll probably clear 350 grand.
Yeah,
right?
you'd hope so.
So it's well worthwhile exercise. Now, you mentioned that you had to refinance your entire portfolio in order to secure the financing for this. Do you have financing for the construction?
I do.
Of this? Okay, so that's all approved.
Yep.
Okay. And how many properties did you need to refinance?
So what I did, I sort of left this one separate and I refinanced the other 9.
Okay, so you got 9 other properties.
Yeah.
Okay, but you didn't refinance this property?
No, not to start with, no.
So you got 10 properties in your portfolio?
Yeah.
Okay, so 9 other properties, you refinanced all of them?
Correct.
That sounds like a headache.
It was a headache.
Why did you have to refinance all 9 of them? Was it to draw equity or?
Yeah, essentially, what we needed to do for the construction. Well, number one, I was on some loans. They were fixed. They were relatively high. Although there were break costs, I'm still much better off paying those rates and get it. Within 1 year, I'll more than make that back in what I'm sort of saving with new rates. So I'm happy about that. But what we needed to do essentially was get some equity out of the existing portfolio, so that we could present a case for the construction loan to another lender, basically. So we refinanced. We said, hey, here's the equity. Here's what my repayments are now. blah, 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 and then put that money towards the build.
Through refinancing those 9 properties, you obviously pay a lot less interest.
Yeah,
on them now.
about $2,000 a month less
interest.
Okay,
so $25,000 a year. That's a lot of money.
That's quite a bit of money.
That's $25,000 more you have in your back pocket.
Yeah.
And what was the sum of the break costs to do that?
They were about $15,000.
So already you're 10 ahead.
Exactly. Yeah.
Yeah, and then whatever happens subsequently to
Yeah.
that. And did you move everything to interest only variable?
Mixture, actually.
So some fixed, some
fixed,
only.
yeah, and then I've got a couple of sort of offsets on them as well.
Okay, and sort of your logic for fixing some and interest only some, you fix those ones which you are pretty confident you're not going to do anything with.
Yeah.
And what sort of fixed term did you put in on most of them? So 3-year fixed?
3 years, yeah.
What were you fixing at? 2 point something?
Yeah.
Low threes, high twos?
High twos.
That's pretty good.
Yeah.
And how long did that refinancing process take?
Quite a long time, actually. Yeah. One of the things that took the longest was getting the valuers to actually get out and value the places. Yeah, it took a good couple of months to get it all sorted.
And you just used a mortgage broker for that?
Used a mortgage broker at Finney.
Okay. How are they? Are they all right?
Very good. Excellent. Okay. Yeah.
And what, one person looked after your whole...
Pretty much, yeah. Pretty much.
It's a lot of work to put it all together.
Yeah, definitely. Yeah. And they're still working with the construction loan as well as that's ongoing.
So, but everything now has been refinanced?
Everything now has been refinanced.
And did you change lenders?
I did change lender, yeah.
Okay. Like, did you choose a number of lenders or you went to one particular lender?
I actually went one particular lender. Okay. I moved from a major bank to a non-bank lender. Okay. I went to use First Mac.
Okay. First Mac's good business. They've been around for a long time. So they were happy to take the whole kit and caboodle.
They were indeed, yeah.
Yeah, that's okay. Does it concern you having all your eggs in one lending basket?
No, it doesn't really, no.
I guess, their rates are no doubt stay in line with the
banks.
Again, this is one of the things people go, I don't want to go.
Again, not just rate. Yes, their rates were very competitive, but again, they had the ability to look outside the normal at my portfolio and my earning capacity and how I sort of, not everyone would have approved me for the finance, put it that way.
Yeah, but it's not many. Number one, there's not many people with 9 properties, right? So already you're pretty unique. You're one of 20,000 Australians that own more than 6 properties, right? And that's as many as you get to a football game on a Sunday, watching Parramatta play. It's probably more, to be honest with you. But to give some context, right? That's how many Australians own more than 6 properties. So you're already completely unique. So a lot of lenders just go, "Oh, I don't get." If you walked into a bank branch, they just go, Why do you have 9 properties?" They'll probably ask you.
Yeah.
It's not their sort of core focus. So I can see why that particular lender would make sense. So you refinance everything. It's all together. It's all consolidated. Were you happy with the valuations you got from the lenders, or it didn't really matter that much?
It didn't matter too much. Yeah, look, some were better than we thought, and some were a little bit lower. A couple we went back and said, no, look, you can redo that.
And did they redo it?
Yeah, they did. Yeah, okay. yeah. I mean, look, it's age-old problem with valuers. Tend to be on the cautious side most of the time,
particularly in this market.
Yeah. So again, that's the value of having a good mortgage broker that knows how to sort of push a valuer and push the lender to make sure that the valuers do the job correctly. And then
did you take any equity out?
In terms of actually using it,
well, did you draw down equity and put it in offsets? It's probably the strategy.
Correct.
Okay, so you have liquid cash if you need it.
That's right.
So you're still paying interest based on a particular rate, even though you have access to the cash.
Yeah.
And what sort of pool of funds would you have in offsets now that you can use for?
$200,000.
Okay. And is that just for sundries as part of?
That's just potentially for this, but we shouldn't have to use it for the construction. So ideally, it's just going to sit there, do nothing, and then once the construction's done, in 9 to 10 months, hopefully, if things go well, then I'll look to buy again, basically.
Okay,
so.
I'm peppering you with a lot of questions, aren't I?
Yeah.
Just like boom, boom. How's that? Is it all right?
It's okay. It's all right. Yeah.
Well, this is it.
Yeah, I don't have the actual figures right in front of me.
No, you don't. But I know you're Yeah, you've been investing for 10 years, so you can answer these questions. I'm not talking about concepts which
No.
you're not familiar with. However, no doubt a lot of our listeners are sitting there going, Jesus Christ, it's all these different questions around different. So if any of this sounds super complicated or you're unsure of anything we're talking about, there's lots of stuff on smartpropertyinvestment.com.au. Happy to also answer any questions. We can do a Q&A episode at any time. Editor at smartpropertyinvestment.com.au. Email it there, because we're talking strategically but also tactically, and if you're not really across this whole idea how offsets work, there's heaps of information on the website, but how you can use them, why you can use them. We're talking about liquid cash, saying, the fact that you've got the money but you're not paying interest on it. These are all the tools that you have in your tool chest to be an effective property investor. Now, where Jim's set now is that you've got a construction loan, so let's have a chat about that. So this is a pool of money from the same lender?
No, different lender.
Different lender. Is that with the original lender who you have in the mortgage for this property on?
It actually is.
Okay, which makes things a little bit easier, right?
Yeah,
No doubt.
although we had to work at that, their rates were way higher. So we actually took, going on about good mortgage brokers. Mortgage broker took some other competitor rates to the bank.
Okay.
And
they bought it in line.
They brought it down a lot, let's say.
Did they? Is it a fixed rate product on the current property, or is it variable?
No, variable.
And was it on a good rate, or did you get that renegotiated?
No, it's good.
And what sort of rate are you paying on your construction finance?
Oh, I don't know off the top of my head. It's higher.
Yeah. But what you'd expect in this sort of current market, you're not paying overs for the privilege of borrowing construction money. It's a consumer product, right? It's not any sort of specialist finance.
Yeah.
And that's 800. They're giving you 600 grand.
Well, they do it bit by bit as the, they've approved me for the full amount.
Total facility.
And then how it works is as the builder goes through steps, they pay it in sort of tranches.
So let's talk about that. We'll just go to another break. See you in a moment.
Missing the lucrative cash-on-cash returns from almost a decade ago? Australia's award-winning buyers agents Rethink Investing are currently securing 6 to 9% net yields on high-quality commercial assets for their clients. We're talking 25 to 40% cash-on-cash returns, something not seen in Australia since 2012. Right now is the opportunity of a lifetime to maximise your wealth through commercial property. Hurry, contact Australia's commercial property specialists now at rethinkinvesting.com.au.
And welcome back, everyone. Phil Tarrant from Smart Property Investment Show. We're chatting, getting set for Jim's great duplex. Do you want to, maybe we can tell this story if you're happy to keep sort of sharing this journey? Because I know a lot of people, this is a duplex for many people is their first foray into being a property developer. Like now you're a property developer. Do you feel any different from being a property investor to a property developer?
No, not really.
Is that what you tell people you do when you go to a barbecue now? What do you do for a living, Jim? Property developer. Got a duplex in St Andrews going out of the ground right now. Going to make 400 grand.
No, it's look, I'm generally quite excited by it, to be honest. Again, over the last 10 years, I've got quite comfortable with debt and money, so I'm okay with that element. And I guess that, who knows what might go wrong or right, But again, I think, being in property investment for the last 10 years has been quite a bit of ups and downs, certainly some good ups and certainly some downs and challenges. And like you mentioned earlier on about the smart property investment portfolio, I mean, I've got a similar portfolio to that in terms of the makeup of it, the properties, and
some headaches in there.
I've got a fence on, something like 100-foot long fence that's going to cost a couple of grand in some place in Queensland, and constantly there's bits and pieces like that. So
my sort of own portfolio, obviously outside of the smart property investment one, I had to spend $5,500 last week to fix a plumbing issue.
Yeah.
Which was they had to dig a hole 2 meters into the ground, shimmy up some pipes, and then put the dirt back in that hole. And it cost me $5,000.
Yeah.
Can't see it. Don't know what they've done. It literally is a black hole, right? Yeah. Like I'm just going. He sent me a picture of it, and I went, mate, I could have done that. Got some blue glue and a couple of pipes and fixed that. $5,000.
Yeah.
$5,000.
Yeah, I'm familiar with things like that.
This is the privilege as a property investor you get to deal with. They're very much first world problems. But so you've got a construction loan ready to go. So what happens with that, for those who aren't familiar with it, is that it's paid down in tranches at milestones. So no doubt when you sign a contract and you've got to start work, there's probably a bit for knocking down the house and preparing the site.
They lend it out.
There's probably a bit for the excavation stage. So they just don't give all the money to the builder and say, go and do it. The reason why is because a lot of builders go bust. And to generalise, sometimes builders aren't great with their cash flow management. So what they do, they give it in tranches. So should there be an issue around the solvency of a particular builder and or the quality of the work that's done, or the work has been done to a time frame, they're not all in and blow.
I think that's what I believe. Yeah, so this is my first time, so I don't know. I can happily share it, know, once it's done or whatever. But yeah, my understanding is, and then they will revalue, like, you know, at a point in time as well, to make sure that they're still lending against what is
appropriate. And what that does, it also protects them a little bit should markets change. And they don't really care if markets go up because they're going great. That means it's de-risking their point, their financing from an LVR point of view. Should the investor not be able to afford it, they know they're going to get the money back. Should they need to sell it, that's all good and maybe get a little bit more. But if markets go south, it allows them to, and I've heard it before where they stop construction finance when they just go, this is going to end up underwater and we don't want to carry that risk. So these things happen, right?
Yeah.
And some of the challenges with development. But you've done your market assessment. So you've already spoken to some agents saying what would these rent for and what would be the valuation of these. And was that your idea, or did your buyer's agent help you with that? Or
no, it's my own sort of thinking, to be honest. I mean, I've got quite a few different agents that I speak to, and I spoke to the current one. I've got 2 properties in that area. Professionals in Campbelltown, they manage both of those. I sort of asked them, and then got a few others sort of.
And they'll probably want to help you because they'll no doubt want the listings, right?
Yeah, and I did my own research as well. You know, I went on REA on realestate.com and Domain and had a look around so I could, gauge the market myself. Yeah. So, yeah.
How involved were you in the design of it? Did you buy some off the shelf type thing?
That looks fine to me.
Don't care.
Don't care.
Are you scrimping on internal finishes and fixings, or?
I'm doing what is. I'm just doing it pretty standard, to be honest.
But you're building it for investors rather than
correct.
You're not overcapitalising with marble bench tops.
Definitely not.
Meg appliances. And so the point I'm making is that you're building the property for the demographic of the area, what people would expecting in a house.
It'll be a really nice house for someone to call their own and rent, So, there's no point overspending on...
So largely vanilla then? So there's no sort of ornate gold leaf fixtures and fittings?
Not as far as I'm aware, no.
And did how do they present... And this is like, in terms of development of duplexes, you don't need to redesign. You just go, give me plan number X off the block where because they've probably got existing designs for existing... what do you call them? Land size.
Yeah, I actually got 3 different options when I first got it, and originally it was a 3-bedroom, and I sort of looked into, well, what if we did 4, and the economics were much better just to do 4. I think it was extra $20,000 to do an extra bedroom. Yeah. I think maybe not even that. Wasn't a lot more. But the area lends itself a lot more to sort of 4-bedroom houses, bigger families.
3 kids,
so that made a lot of sense. It was just put out in a really reasonably simple to read. These are the stages of how we operate. This is what we do. Phase 1, phase 2, phase 3, phase 5. Really quite simple, to be honest.
And in terms of the DA, so they say that you pay them the fee to do all that.
They do this. That's included in the fee. Yeah, and the fees. I haven't got it in front of me, unfortunately. Otherwise, I could have taken.
I might have a look at that if you don't mind sharing.
Yeah, I'd be happy to. It's got all sort of the breakdown and stuff. So
And in terms of the DA side of things, so do these builders specialise in building in that particular area? So they know all the rules, probably.
Yes.
Yeah. Okay. And did you actually met the builders? Or you had
I haven't.
Electronic relationship.
No, just by telephone at the moment. Yeah.
And you got them through referral via your buyer's agent.
Correct.
Okay. Which no doubt they've probably done stuff with them before.
Through my accountant. Actually.
Through your accountant, sorry, who've done stuff with them before.
Yes.
Yeah, and that's a really good point. Taking, you can go to market and get a number of quotes, but if someone's had a good experience with someone prior, that's a good testimonial for how they go about doing stuff.
Definitely. I mean, I think this is, there's a lot of, I don't know if it's the right word, but there's a lot of chances out there. I mean, as I said, I got quoted a few weeks beforehand, $400,000 for essentially the same thing. So,
and some people just go, yeah, sure.
I would imagine so.
Yeah, and there, I tell these stories about those people who do well in property, and like you and myself own more than 6 investment properties. There's those that don't, and a lot of people where they do go wrong is that they go, well, I want to be a property developer. They want to build a duplex and they pay overs by $400,000 on a property. And then you got to question, well, how different is the property? Is there $400,000 worth of difference? And that's a fair question to ask. What makes it $400,000 different? So that's $200,000.
Maybe a Bentley in the drive or something
maybe
like
a Bentley in the drive, but
maybe that's why. Maybe I didn't read the fine print.
Yeah. So and sort of choosing a builder is a whole podcast in itself. But Jim, that's really informative, mate. Thanks for checking in. Let us know where you're at. So you're happy for us to follow you as you go down this pathway?
Yeah, of course.
Of the build. And,
hopefully it's plain sailing, but you never know.
No. And Jim, for those of you who don't know, is obviously highly invested in the Smart Property Investment Show as well. He is the Director of Consumer Wealth and Real Estate here at Momentum Media, so my colleague as well. So you know the product well, and if you're happy to share your journey through this, that'll be really good. If you sense a bit of familiarity between me and Jim, that's the reason why. So we work together daily, or hourly basis sometimes, minute by minute. But this is all about the Smart Property Investment Show and investor stories, and investors come in all walks of life. Jim's an executive, he's a professional, and he's also a property investor who's looking to create long-term wealth through property, building out his capital base. So at a point in time, he can realise that, however that looks like. He might choose to retire on a beach in Mallorca with his 10 properties back in Australia.
Property's a lot cheaper there.
It is a lot cheaper there. But, and long term, your goal is to draw an income from this portfolio.
Yeah, that's right.
Yeah. But again, we'll check in on that. So the next podcast for us, next milestone would be you've signed the contract when you probably get through that first sort of couple of phases, the knockdown and the excavation. We can go out and have a look around and take some video.
Yeah, right.
That'll be good. Thank you, Jim.
No problem. Thanks, Phil.
Hope you enjoyed that, everyone. Remember, smartpropertyinvestment.com.au. There's heaps of investor stories like this. And if you want to come have a chat with us, it's not that bad, is it, Jim?
No, it's all right.
I am conscious I'm peppering you with
no, it's fine.
with questions, but you're a big boy. And we've covered a lot. We've covered a lot there on this podcast, a whole bunch of different themes and scenarios and stuff. So editor at smartpropertyinvestment.com.au. Send your emails there. Our team will pick it up there. We'll package them all together and do a Q&A episode. We can dig down into any of those different points that you want. Social media is where you like to get your info. Smart Property HQ is where you'll find us. Please, as I mentioned beforehand, those reviews that are coming through on iTunes, whatever podcast platform you use, we get a real kick out of reviewing them, and we do discuss them. And if there is any sort of considered opinions on how we can improve the show, we are all ears. So make sure you let us know. You can email us as well. That's the Smart Property Investment Show for this time around. Hope you enjoyed it. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
What would your life be like without education? So They Can knows that education is key to breaking the poverty cycle. Yet sub-Saharan Africa has the highest rates of education exclusion in the world. COVID-19 has only exacerbated that, with estimates indicating that girls in particular are 16% less likely to return to school. Join So They Can on their mission to educate and empower students in East Africa to change their future by sponsoring a student, extending your family circle, or joining an education collective to sponsor a school today. Visit sotheycan.org/sponsor to find out more.